Hello everyone, I'm Oluchi and I'll be taking you on financial accounting. On today's lesson, we'll be looking at introduction to financial accounting. From the word financial accounting, we can see that it's composed of two key words, which are financial and accounting. So from financial, we can see that it's deduced from finance, finance. So finance simply means monetary, anything that is in money or anything that is in monetary form. Then for accounting can be deduced from accounts, which means making reports of a particular event, giving reports. Whenever they say give account of this happening, it means to give reports or tell us what happened about this particular event. So literally, financial accounting is giving reports of business events, giving reports of financial events, giving reports of money events. Now, we want to give us the full definition of what financial accounting is. Financial accounting means recording business transactions and summarizing them into financial statements for the purpose of decision making by the users. We record business transactions and summarizing them into financial statements and for the purpose of decision making for the users. We can see that this is not the first time we're actually hearing the definition of financial accounting. If you go to many textbooks, you will see recording, classifying, numerizing, interpreting, and communication. All these things are grouped under these keywords which I have written on the board: recording, business transactions, summarizing, financial statements, decision makings, and users. So I want us to know the in-depth, because we are basically treating introduction to financial accounts. I want us to know the in-depth and the meaning of these keywords to make us to fully understand what financial accounting is. When we come to recording means writing down business transactions into the book of accounts. Writing down business transaction into the book of accounts. This is just the basic definition of recording. So when we come to business transactions can be defined as the activities of the business or of an organization that deals with money. We have many activities that go on in the business, but not all deals with money. For example, when the manager comes and slaps the secretary, this is an activity. You will not expect the accountant to come and record it in the book of accounts. But once the manager used the money from the business to treat the injury that was secured by the secretary during the slap, that is when the accountants can now record it in the book of transaction as a business transaction, the book of account as a business transaction. Because many activities happens in the business and not all are activities that deals with money. Now we have two types of business transactions. We have credit transactions and we have cash transactions. We have credit transactions and we have cash transactions. What are credit transactions? Credit transactions are those transactions that does not require payments at the spot. There are transactions that does not require payments at the spot. That you make the business now and you have to make payments in the later time. But when it comes to cash transactions are those transactions that require payments at the spot. For credit transactions, there will surely be payments, but the payment will be secreted at the later date. But for cash transactions, you have to make the transaction you have to make the payments at that particular spot, and that is what cash transaction is all about.